The broadcast is now starting. All attendees are in listen-only mode.
All right. Good afternoon, folks. Thank you for joining the presentation. Today, we're going to focus on automatic enrollment tax credits and specifically how that applies to owner-only retirement plans and those plans that are specifically administered here by NOVA. Quick disclaimer, again, the information in this presentation is not intended to be legal or tax advice. If you're seeking such advice, certainly get the guidance of a qualified professional such as an attorney or accountant. Again, the target audience for today will be financial advisors that work with owner-only defined contribution plans, and those plans specifically for which NOVA is the third-party administrator on. Quick overview of the agenda. We'll do a quick hit on Secure 2.0, an overview of the tax credits that are available to all retirement plans, and then a little bit more of a deeper dive on the automatic enrollment tax credit and how that applies to our owner-only 401k plans. So again, a quick introduction to Secure 2.0. If you're a financial advisor that works at all in any type of retirement plan, you've heard ad nauseum about Secure 1.0, and then again, the bigger Secure 2.0 legislation that was passed in the waning hours of 2022. Again, Secure 2.0 has just a sweeping list of provisions that ultimately will impact retirement plans that phase in over the next few years. From a practitioner standpoint, we've been kind of looking for guidance from the IRS on how to implement some of these provisions. You've heard things like long-term part-time employees, Roth employer contributions, mandatory automatic enrollment, right? So all these items are outlined in Secure 2.0, but the question has been for a while, how do we implement some of this stuff? We did receive guidance from the IRS in December of 2023 on really a slew of these items and are happy to be progressing with implementation of those items moving forward. So again, from a Secure 2.0 standpoint and as it impacts owner-only retirement plans, there's an update on Roth employer contributions that's handled in a separate presentation. If you have any interest in that topic, I'd certainly encourage you to check out the other presentation available on our YouTube channel there. And then again, there's a slew of possible tax credits that are available to all retirement plans and some that are limited to owner-only plans, or I'm sorry, the owner-only plans to take advantage of, but we'll do a deeper dive on all the tax credits and then again, specifically the automatic enrollment options here in just a bit. So from a just tax credit standpoint, there's 3 credits in particular that you as advisors would be interested in. The first one here, unfortunately, is not applicable to owner-only plans. For a while, there's been some incentive from the IRS that encourage plan sponsors to, establish retirement plans, and that incentive came in the form of originally deductions and then, some credits available to offset administrative fees associated with establishing the plan. Secure 2.0 really enhanced that startup cost credit to now where it's essentially up to $5,000 per year for the first 3 years of plans in place. Unfortunately, that credit is again not available to owner-only plans. But if you are working on a plan that might qualify for that credit, we'd certainly be willing to discuss that with you and give you some guidance there. The automatic enrollment credit is again the focus of today's presentation. That's going to be available to both plans, quote unquote, small employers, and then also owner-only plans. And then the employer contribution credit, again, that's going to be the focus of another presentation. If you are interested in that topic, I'd certainly encourage you to watch that presentation as well, as some very good information there. So automatic enrollment tax credit. So let's start with what is automatic enrollment. In a nutshell, it's a plan provision that defaults employees who make no affirmative election to be in a plan. So historically, if I'm an employee and I qualified to contribute to my employer's retirement plan, I'd receive a notification, hey, congratulations, you can now contribute. If I take no action, I would simply not be a participating employee in the plan. So the challenge with that is you just have a ton of employees that maybe get the notification and ignore it, get the notification and forget to take action, whatever it might be. The employee's own inertia was working against them to keep them out of the plan. So, one of the ways to increase participation in the plan is to say, hey, instead of having the employee make an affirmative election to get into the plan, let's only have those employees that don't want to be in the plan make that affirmative election. So, the industry calls it various terms. It could be a negative election, an automatic contribution provision, an opt-out provision. Ultimately, the employee is set up to defer at a default rate unless they take action to decide, I do not want to contribute to the retirement plan. One important point here is once the employee has made an affirmative election, they're no longer required to have any automatic enrollment provision applied to them. And another example of that be like an auto escalation provision. So if I'm an employee and I say, no, I don't want to be in the plan, obviously I would not have to be auto escalated at some point in the future. So again, there's two different kind of impacts to automatic enrollment, to the automatic enrollment feature under Secure Act. Under Secure 2.0, new plans established after 2023 ultimately have to add an automatic enrollment provision, oftentimes with the auto escalation feature. For those plans started after 2023 with more than 10 employees, this is coming into play going into 2025, which is really within the next 6 to 12 months. So be on the lookout for more information if you have plans that also fall within that criteria. This feature does not apply, however, to owner-only plans. The secure tax credit that does apply to owner-only plans for automatic enrollment, the secure tax credit that does apply for owner-only plans would be for adding the automatic enrollment feature. The code section that covers the automatic enrollment tax credit is under code section 45T. The provision basically indicates that for any plan that adds a quote unquote EACA, our industry is famous for naming stuff after IRS code sections or various acronyms. The EACA is just eligible automatic contribution arrangement. Those plans are eligible to receive a tax credit of $500 per year for 3 years. And so year one is the year the automatic enrollment feature is added. The following 2 years, the tax credit is also available. So for example, if I add automatic enrollment in 2024, I'm eligible to receive a credit in 2024, then also in years 25 and 26. The credit is claimed on Form 8881. Again, if you're working with CPAs that work with qualified plans on a regular basis, they're probably familiar with this form. There's other credits that have been claimed on this form in the past. We certainly run into CPAs from time to time that don't really deal with qualified plans, or they're just not familiar with how to claim these credits. So you'd want to point them in that direction. You're also welcome to point them to any of our presentations if they want to learn more about any of these topics. Again, from an employer standpoint, they'd want to verify with their CPA they qualify and how to claim that credit and make sure they are claiming in a given year. Again, so who qualifies for the credit, right? The IRS very specifically indicated that quote unquote small employers are the companies that qualify for this credit. And a small employer is defined as an employer who has no more than 100 employees that receive more than $5,000 in compensation in the preceding tax year. So, if I'm a employer with 1,000 employees, I'm not going to qualify for adding an automatic enrollment feature to my plan. Again, very specific, important item here is to claim this credit, there is no requirement that the plan has non-highly compensated employees. So again, this credit's available to small employers, even those that do not have any non-highly compensated employees. So from NOVA's standpoint, what are some items that we're thinking about with regards to automatic enrollment, and what are some of these specific items as it relates to taking advantage of the tax credit? For those of you that have written owner-only plans with us in the recent past, you've probably done so using our Instant Solo K kind of tool. That tool has been updated after April 1st to automatically include automatic enrollment as a default provision. So any plan written with us after 4/1 will have automatic enrollment built in, so plan sponsors can go ahead and take advantage of this credit. Clearly, there's no extra amendment that needs to be done since we're writing that as a provision into new startups. And then again, the following year after the plan is written, we'll send a reminder out, just notifying both the employer and you as the advisor that this credit's available and to work with the CPA to claim that credit accordingly. So for new plans, it's pretty simple, right? But what about for existing plans? There will be an amendment that has to be done to the plan document for any existing Solo K plans to add this feature. For some reason, it's already in there, great. any plan that we would have written in the past is generally not going to have an automatic enrollment feature for owner-only plans. Unfortunately, we cannot adopt an automatic enrollment amendment on behalf of all of our owner-only plans, kind of at the document sponsor level. This is a plan design feature that the plan sponsor will have to elect, add to their plan, and sign an amendment accordingly. So a couple different options on how can we get this feature into our plans so our clients can take advantage of the credit. We do want to encourage clients to take advantage of it, and we're going to offer an incentive for plan sponsors to kind of go ahead and add it immediately. So we'll be sending communication out here in the next week or so to our plan sponsors indicating that this is an option. If they would like to take advantage of the credit, there'll be an opt-in form that they need to sign to say, yes, I'd like to add it to my plan, and their plan will be restated for a reduced amendment fee of $200. So again, you'll be copied on that communication from an advisor standpoint, and just encourage your sponsors to take advantage of adding this feature, get that form to us by April 26th. Option two, again, some clients for whatever reason may not want to add it, just doesn't, they're too busy, whatever it might be, right? We don't get it added by April 26th. We can still request to have the plan amended at any time to add the automatic enrollment feature. Our standard amendment fee will apply in that situation of $300. Again, we can add that anytime after April 26th. And again, we're certainly going to have some plan sponsors that simply don't want to take any action and choose not to add that feature at this time. With our next document restatement cycle, we will be adding the automatic enrollment feature to those plans that do not yet have it. And so at that point, there will be a charge for the document restatement, but no additional fee for, from an amendment standpoint to add the automatic enrollment feature. So 3 different ways to add it. I'd certainly encourage those of you that are interested in having your sponsors add this feature to take advantage of it and get that form in again by April 26th. So what are some opportunities for you guys, as advisors to bring some value and just again, encourage your sponsors to take advantage of this credit. So first thing here is just, have a conversation with the plan sponsor and the CPA about A, adding the credit in general, but B, when's the right time to add that credit? From a deduction standpoint, some might value, adding the credit in a more timely manner than others. Some might want to add it immediately for whatever reason. Others might want to hold off down the road for some reason. So again, discussing when it might make sense to add that credit. From one of the perks that we see this as is, or one of the perks that we see of adding this automatic enrollment feature to claim the credit is, one of the headaches that plan sponsors sometimes associate with owner-only retirement plans is there's an administrative fee, right? People don't like fees in general. I don't want to pay more for something than I have to. And so, for a $200 amendment fee, I'm basically going to net my plan sponsor a credit of $1,200. And so, the conversation around administrative fees, whether it's the startup fees or the ongoing fees for operating the plan, that could kind of be assuaged a little bit by adding in this automatic enrollment credit. And then again, we don't know what the future holds. The credit as the law is written today is available, but there's no guarantee that the law won't change in the future, right? And so it would make sense to get as much of the credit as we can. And so, we know today that if we add it in 2024, the credit's available for 2024. But, again, there's no guarantee they don't remove it in 25 or 26, 27, right? So let's get it in there before the law changes and we can't take advantage of it maybe at some point in the future. Additional opportunities for advisors, again, just when working with the plan sponsor, whether it's for a quote unquote real plan that has employees in it or owner-only retirement plan, please encourage those sponsors to complete deferral election forms, right? Even owner-only plans need to have an affirmative election on file to show how much the plan sponsor is choosing to contribute to the plan. And then on a go-forward basis, these plans that have automatic enrollment default rates in them, we needed an affirmative election for the plan sponsor to override the automatic enrollment language. And then again, just if you can work with your plan sponsors to remind them that when we do our data requests, it's not to be annoying. They've actually hired us to do the compliance work on their plan, and it's important to get that annual questionnaire filled out and to get us data in a timely manner. One of the items we would certainly request is the client sends us full data on any employee they've had throughout the year. One of the biggest issues for owner-only plans they run into is not realizing they can no longer operate as owner only once they've had an employee for a certain amount of time, right? So give us full data. If an employee is going to be hired, and especially if it's going to be a long-time employee, give us a heads up so we can provide proper guidance on the structure of the plan design on a go-forward basis. But big picture, get that data in as soon as you can, and that will allow us to do the job they've hired us to do. With that being said, that should wrap up our conversation around the automatic enrollment credits. Appreciate everybody joining today and look forward to talking to you in the future.